Welcome back. You're still with us on Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking for you. Well, on to the fourth headline this evening. Let's get you the latest on the insurance front. The regulator IRDA had proposed the formation of Bima Sugam, that will be a one-stop platform for all insurance needs. Now, industry feedback suggests that this platform is likely to charge commissions at a much lower rate than current levels. Yash is here to give us a lowdown on what Policy Bazaar is seeking.
Well, this indeed is a very crucial ask which PB Fintech has made with the insurance regulator. The ask from PB Fintech's side is that its insurance aggregator platform, that is Policy Bazaar, should be allowed to reduce commissions of various insurance products on the platform and also to pass on those benefits to the policy holders. The timing of this particular ask is very crucial. Remember that the insurance regulator is in the process of putting up an aggregator-like platform, Bima Sugam, which will be responsible for sales, servicing and claims of insurance policies. Not just that, industry feedback suggests that the commissions on Bima Sugam could be 1/4 of the existing commissions which are being paid to the current aggregators or even agents, and hence to stay relevant in the insurance aggregation market, Policy Bazaar has also asked that they should be allowed to reduce commissions to match up to the commissions that Bima Sugam charges, so that they stay relevant in the market, and also they should be allowed to pass on these benefits of lower commissions on the end policy holder. Why aren't these allowed as of now? That's because Policy Bazaar can reduce commissions, but it cannot pass on those benefits to the end policy holder simply because that's considered as a rebate, and that is against the insurance regulations, and hence a change has been asked there. This will certainly impact the revenue, the operational revenue which Policy Bazaar makes, because the entire operational revenue is essentially its commission income, and if the commissions come down, this certainly will have an impact on the operational revenue side for the company. We also spoke to Yashish Dahiya, the co-founder and CEO of Policy Bazaar. Hear out what he had to say on this one.
You're saying, okay, if it happens, if commissions become zero, will you also do commission zero? Will that mean thousands of crores of losses for you? Yeah, of course. 100%. Right. Why else do we have that 6,000 crores of capital lying around? But the point is, I know you want that, and I know you want that fun, but the point is the world is not going there.
Okay, well, meanwhile, earlier in the day, M.R. Kumar, the chairperson of LIC, spoke to CNBC-TV18 about Bima Sugam's impact on agents and LIC's embedded value. Here's a slice of that conversation.
I know the embedded value has been very slow in moving up, but then please remember that when we did this for the first time, we had modeled only 90% of the products, and as of now, we have modeled all the products, and things are settling down. I think it is achieving some kind of consistency now, and going forward, I think it will grow. I can't give a future value to it because we'll have to wait and see what happens, but we're very confident that we'll be able to change things there.
There is this possibility of the Bima Sugam, coming out as well. Regulators are talking about it. It could be a UPI moment for the insurance industry, this one-stop shop policy. Can you tell us how will it change the dynamics of the industry, and for your own business, what could the impact be?
Actually, Bima Sugam initiative is a very good one by the regulator. It proposes to facilitate the digital delivery of services in a very consistent and time-bound manner. So what we have done already is that we have some integration with the banks, new age fintechs and online payment application. Bima Sugam, I think, will further enhance our digital services delivery.
And Bima Sugam, from the industry feedback which we have, the commission could be 1/4 of what agents charge. That is detrimental to the largest, business acquirer for your company. What is the feedback that you're receiving from agents, and could that section of business have a negative impact as far as Bima Sugam is concerned?
In terms of commission rate and other things, yes, it will be reduced, no doubt. But then I'm sure the agents will ramp up their businesses in their own way. We still have a lot of work to do in terms of penetration. There's a lot of work to be done in the country. I don't see any challenge for the agents as of now.
Okay. Tell us a little bit about the plans with IDBI Bank and the stake there.
Government, I think, has already come out with the expression of interest for this. And in terms of that, I think it's clearly defined what kind of a stake we would be wanting to divest. We are as I've said before, very keen on continuing a partnership with IDBI Bank, who is the #1 bank assurance partner for us as of now. They've done very good work in the bank assurance space. We would like to ensure that we have just enough stake to carry on that momentum. But again, it will depend on the regulatory space, both in the banking and the insurance regulatory space, how much we will be able to hold in the future.
Something which all investors of the company do want to know from you: why did you not choose to distribute those profits to your investors in the form of dividend, in the form of bonus? And if not in this quarter, for the financial year, is there a plan which is being considered on a dividend or a bonus?
As of now, there are no plans. We will have to discuss it, in depth, deeply, internally, and with the board.
Okay, so that's the word coming in from LIC, but let's move to the fifth headline this evening. Rail PSUs, Railtel, RVNL and IRCON scaled 52-week highs on strong Q2 results and order inflows. In fact, market veteran Ramesh Damani sees great opportunity in the railway and the defence sectors. Listen in.
The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment. And here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books. They have excellent technological skills. And we are buying them literally, as I said, rupee ki chavandi mein, not even athandi mein. So, we're very confident about the play out in these sectors. A lot of what's happening in India excites me. And the reason for that is by just a freak of coincidence. We're at the right place at the right time.
Okay, well, sticking with railway PSUs, IRCTC slid 2% today after a soft quarter that saw revenue, EBITDA and margins all fall sequentially. This comes despite a 99% rise in revenue year on year. Mangla Malu is here with the details on IRCTC.
It has been a soft quarter indeed for IRCTC, and that's why the stock is lower in today's trading session. Depends on how you look at it. One would say that quarter on quarter it is a slow train, 5% decline in their revenues as well as the EBITDA, as a result of which an 8% decline in their profitability as well. But if you take a look at it year on year, there has been a 99% jump in their revenues, but that has meant that, despite that, the EBITDA has grown just around 44% and the net profit too has grown at similar levels. Why is that? Because the growth has been led by businesses which were only partially open the same time last year. Case in point, something like the catering business, which grew about almost 370% in terms of revenue this year. But with that, we also saw catering expenses grow from almost 228 odd crores to 280 odd crores. That's a low margin business for the company. The business that drives the margins for them, which is the internet business, internet ticketing business, that was flat quarter on quarter, and year on year as well, the growth was just about 13%. Nothing really to write home about. The other business that did well for them was Rail Neer, which was the water business. Again, on account of a favorable base, grew by about 75%. But this too is a 7.5% to about 8% sort of margin business. So growth being led by margin draggers, whereas the margin supporter was the one which saw very limited growth, which is why the stock is lower in trade today.
Okay, all right, Manglam. Thanks very much for that. On that note, it's also a wrap on this edition of Markets Today. Thanks very much for watching.